One fund industry, never bigger or better than now, and the expert to talk about it. This is a special edition of the ETF of the Week. Yes, welcome to the ETF of the Week, where under ordinary circumstances, we're looking at new, newsworthy, trending, timely, and unique ETFs to talk about with you. But this week, it's our second special holiday or New Year's edition of the ETF of the Week, where we look at some of the big stories in the ETF space from 2024. We're doing it, of course, with Todd Rosenbluth. He's head of research at VettaFi, and at VettaFi.com, you'll find all the tools you need to live up to your New Year's resolutions and make yourself a better investor in exchange-traded funds. Todd Rosenbluth, Happy New Year. It's great to see you again for the ETF of the Week.
Happy 2025. Wow, 2024 was a great one for us and for the industry.
Well, and we talked last week about the industry stories and some of the things that happened during 2024. We want to still be looking at 2024 before we spring into the new year next week with another fund that we're going to look at. But for you, as you recap 2024, what were a couple of the biggest stories to you that stood out that people should keep in mind as we turn into the new year?
So we talked about last week about $1 trillion and counting. Oh, I guess not counting by the time people are listening to this in the new year for the ETF industry and gathering assets. One of the milestones, we're actually about to be celebrating the 1-year anniversary for the spot Bitcoin ETFs. They came to market in early January of 2024. We thought there would be some pent up demand, but my goodness, this was much more popular than certainly I and many people, even the optimists in the ETF industry, would have had. So iShares Bitcoin Trust, IBIT or IBIT, has more than $50 billion in assets, as you and I are talking right now. This is a product that came from zero. This was not a conversion. I think we talked about Grayscale converting a pre-existing product into the ETF wrapper. I think we talked about that roughly a year ago at this time. But the iShares product started at zero. It was very popular. It was leading the charge. But what's also interesting to me is when I look through those spot Bitcoin ETFs, and there were close to 10. In fact, there were 10 that came to market on day one. Another one came to market soon after. Even the 8th, the 9th, the 10th largest of those products, it would have been a success story. Close to $1 billion for each of those products, from Franklin, from CoinShares, from Invesco. $1 billion for a new product in any other time would be celebrating. It's in the same industry competing with a firm like BlackRock that pulled in $50 billion. So the spot Bitcoin ETFs is by far the most topical thing that was in focus.
And maybe a preview for this year, when you wind up seeing, because they've all reached critical mass, they could all survive, or we could see some folks basically say, yeah, maybe this business is going to see some consolidation. So if you had to guess, will all of those funds reach the 2-year mark? I mean, they've gotten this big.
I think they will. I think it's profitable to run this business with close to $1 billion, if not more, in assets under management. We in the industry tend to see that $100 million mark as a threshold for profitability and to keep the product around. And what we've seen is many of those firms expanded their lineup of spot Bitcoin ETFs in the crypto world to include Ethereum ETFs. Now they were popular, not as popular, but still popular. And I think in 2025, we'll have a new administration. We'll have new head of the SEC. We're likely to see more products, but we're also excited in the crypto space because we now have options, ETF options tied to these products, that we can see some of the derivative-based ETFs or options-based ETFs that were popular in 2024. We're going to see in 2025 options-based or downside protection strategies tied to Bitcoin. We have firms like Calamos and Innovator among those that are planning on launching products imminently, possibly in January, if not in February, which just makes it exciting because the options-based world is in the ETF space is been exploding as well.
Yeah. So let's pick up on that story because I know it's one of the other big ones. I mean, there was a stretch there where it seemed like whether I was talking with you or I was just reading the emails that I get from fund companies about what they're doing, where all I was hearing about was covered call strategies and those sorts of things. How mainstream are they becoming? Like, this was something that you used to go, oh, I've got savvy investors who understand a covered call strategy. And now it seems like everybody's being pitched covered call strategies. I'm not always sure that the consumer knows what they're getting, but they're being pitched these because, yeah, the wrapper that a covered call can provide is kind of some insurance. And in a market that feels increasingly uncertain, even though it's been a great market, that's been very popular.
It has been. So I tend to think of the options based ETF world in a couple of different ways. It's either adding income. So JP Morgan has a very popular suite of products, JEPI and JEPQ. I was recently at the NASDAQ to help celebrate JEPQ, which was the more popular, the NASDAQ version of that strategy. And I think we've talked about NEOS in our ETF of the Week segments. They have had a lot of success with their S&P 500. ETF SPYI was popular in 2024, and they've been building out their lineup. And then we have the more downside protection oriented products. So Calamos and Innovator, those are two firms that I just referenced in the product development. But 100% downside protection or an alternative to your fixed income exposure. Innovator has a product, BALT, BALT. I don't think we've talked about it this year, but we've seen a lot of money going in for people who want that downside protection on a regular basis. It's bond-like. It doesn't give you the income. These products, these options-based products from Calamos and Innovator are not generating income, but they're reducing that volatility for people who are nervous, as you mentioned, that 2025 won't be as good as 2024. These downside protection products, I think, have been relevant in 2024, and I think they still have a place in many portfolios in 2025.
There are some folks who watch the industry who say all of these things sound good, but eventually with an options strategy, et cetera, you might have a blow up. You might have a problem. Do you worry about that? Do you think, there's another shoe to drop that will be the cautionary tale at some point on one or more of these funds?
So I think if they're used the way that they're intended, so if you buy, so these options based products, there's a shelf life for the option and not for the fund. You can stay in the fund, but if you buy them in the 12-month time period that they're intended, if it's a 12-month or in the 3-month time period at the beginning of it, then you're likely to have a great experience. You can buy something at the wrong time, and then you end up you're not as protected as you think you would. But you're letting the asset manager make this easy for you and to do it. And another trend, if I can just pick up on, because I know we're tight on time, has been the actively managed ETF space. Now, these options-based products you could put in the active world, but for many people, actively managed products is a portfolio manager or team that's picking individual stocks and bonds. And we touched on last week that we've been seeing growing adoption in some of the firms that are in this space. But I want to make sure we come back to it again, because active fixed income in particular was quite popular, and I think will continue to be. The Fed has been cutting rates, I think 100 basis points by the end of the year that they've done. They're not as likely to be cutting rates. An active manager can be a great partner. An active ETF can be a great partner, and I think we're going to continue to see investors embrace active fixed income products. I know we've talked about PIMCO, and I know we've talked about Neuberger Berman, among others, in recent segments. There's a whole a growing industry of firms that now have brought their best and brightest into the space, and that's just really exciting to me in the ETF industry.
It's one of the big stories that we will be looking at as we go through the ETF industry this year. I'm looking forward to that. Todd, thanks so much for joining me. We can't wait to really kick off 2025 with the ETF of the week next week and moving forward. I'll see you then.
Thank you. Happy New Year to all of your listeners.
The ETF of the week is a joint production of VettaFi and MoneyLife with Chuck Jaffe. And I'm Chuck Jaffe, and my show is available to you at moneylifeshow.com or wherever you find your favorite podcasts. Now, if you're looking for information on your favorite ETFs or the ones that could be your favorite, if you live up to your New Year's resolution to be a better investor this year, then go to VettaFi.com and dig into the information that's there. They're on X at Vetta_Fi. Todd Rosenbluth, their head of research, my guest, he's on X as well at Todd Rosenbluth. We resolve to be here for you every week with the ETF of the week. So why don't you resolve to make sure that you don't miss an episode by following along on your favorite podcast app? Until next week, when we will have an interesting fun for you, happy investing and happy new year.